Welcome back to this somewhat special Indianomics, the Deepavali special. I've been speaking to three Indian economy experts, Chetan, Ahya of Morgan Stanley, Santanu, Sengupta of Goldman Sachs, and Vishrut, Rana of S&P Global. Gentlemen, thank you very much for staying on. Well, before the break, I just touched on one point which might make the global economy shudder a bit, every economy, a possible Republican victory, and now the polls are indicating that that is not outside the realm of impossibility. Chetan, Ahya, on that issue, would that make you change Indian economy or EM growth much, a likely Republican victory?
So I think, of course, if it is a Republican president and then they decide to put tariffs on not only China, but rest of the world as well, that would be a significant challenge for Asia's growth story, particularly because in that scenario, we think that there could be a significant impact on global corporate confidence, global capex, and global trade. And Asia is more trade-oriented. So overall, Asia's growth will be definitely impacted in that scenario. However, if there is a tariff only on China, there is a possibility that the impact may not be as bad as what we saw in 2018-19, because now global corporate sector as well as the Chinese companies are all fully aware about this issue between US and China. And they will probably only accelerate that diversification of supply chain effort that they have already embarked upon. So in that scenario, you will have still a negative impact, but it could be less than what we saw in 2018-19.
Okay. Well, there's no point belaboring this too much. We will know, of course, in the first week of November, and I'll invite you all yet again thereafter for your thoughts. But Shantanu, your number, as you said, GDP growth is at 6.5%. Let me present the other case, why your figures can be challenged. There is an excellent harvest that's on our hands, and reservoir levels are very high. So it's expected that rural demand will pick up in the coming months. And then there is this slightly medium-term expectation that there can be an upgrade of India's rating. Macros improving consistently, as you pointed out, on inflation front as well, fisc as well, tax collections, tax to GDP. You think all that can change the medium-term picture and the second half?
So, Latha, 6.5% compared to the emerging market world is still pretty strong growth.
Oh, excellent, yes.
And we have no doubt that the macros are very strong. I mean, India's current account deficit is around 1% of GDP. Inflation is within the target band. Balance sheets, both on the corporate sector side and the bank balance sheets are very strong compared to probably any other cycle previously. But it's just that, even if we bake in the nascent rural recovery for all the reasons that you mentioned, which is already baked into our forecast, we are not seeing a significant boost which takes us towards a 7% or 7% plus number over the second half. I think where we could be surprised in terms of the numbers is if the private corporate capex recovery becomes more broad-based, and there's really animal spirits that goes through the system, and there's a huge boost in private corporate capex. That can definitely push our numbers. I mean, that would sort of push us to push our numbers up towards 7% or so.
No, that's a fair point. Then, one can also say on the downside that first, the MFI loans are becoming difficult, unsecured debt. The next, will secured debt also start to wobble? You can present a negative picture as well. But Vishrut, Rana, what's your sense of, I don't know whether I'm putting you in a piquant situation by asking you whether there are chances of a rating upgrade. But if that were to happen, let's assume it happens. I know it's not in your hands. Can that materially change growth prospects? Because cost of capital falls for business.
Yeah, no, thanks, Latha. No, I did see that line of question coming. So yeah, so with the disclaimer that I'm not part of the Sovereign Ratings Committee, so I would not be able to provide too much more insight on that. Of course, we do have at S&P, we do have India on a positive outlook at the moment, which means that there's a material chance of a rating upgrade over the next couple of years. That's reflecting some of the strong macro fundamentals, the improved spending profile of the fiscal, that our sovereign colleagues have flagged. In terms of how that affects the growth outlook, I think there's of course a more nuanced story regarding that. India's cost of capital does depend very significantly on global financial conditions.
Yeah.
So I think that would be the key watch factor for me as an economist in terms of what is the cost of funding for India and how much spending can be sustained over the medium run. That would ultimately depend on the path of global interest rates.
Okay. Yes, that it does. But, even no matter what the path of global growth and global interest rates are, when a country is on a demographic advantage, when it is in an inflection point, like China was in 1991, irrespective of what the world went through, China just went from strength to strength. Santanu, that medium-term question to you. Do you see the coming together of these factors, the China plus one, the preference for India, the geopolitical advantage and the demographic advantage? Can it mean a much better medium-term story, as Dr. Patra is saying?
I think our medium-term forecasts right now are in the region of 6.5% to 7%. We had done, a lot of work on, where potential growth is for India from the supply side. And it told us that, if you raised your labor force participation rates, you could actually push growth sustainably higher towards the 7+% kind of range over the medium term. And I mean potential. So, cyclically, you could go up to 7.5, and then again fall back to 6.5, which is where we think currently potential is. The tailwinds are all in India's favor. I think what will be important is the broadening out of the capex cycle so that, you're creating more jobs across manufacturing as well as services. Can't really be a one-side story for India. It has to be pretty much spread across everything. I think the last point I would make is that in terms of cost of capital right now, also, if you see that even with the government borrowing so much, you have a pretty flat yield curve in India in the long end segment. The 10s, 30s is like super flat.
Yeah.
So it's not like cost of capital really is what is holding back.
Absolutely. I mean, I can rattle off the negative factors as well. After all, how many tax filers do we have? 8 crore tax filers, of which the people who actually pay tax, direct income tax, is only 3 crore, or 30 million. And therefore, even if you multiply it by a family of 5, we are not speaking of a very, very large consuming class. There is a lot of work to be done when you look at in the medium term. So last word to you, Chetan, Ahya. How much would you give, would you lean towards Michael Patra's forecast that in the medium term, 8% is a possibility?
So, of course, it's a possibility. But, Latha, in our base case, we have similar to what Santanu mentioned, 6.5% to 7%.
Okay.
And I think that number is still pretty strong enough. And I think this is going to ensure that India still reaches that, third largest economy by 2027. So I think it's all track and it's all pretty good. I think 8% and 9% is what probably is required. But at the same time, to achieve that kind of number, there have to be a lot of changes in the economy from supply side, labor reforms, labor force participation rate, and more importantly, also consistent development of infrastructure across all segments and all sectors, not just a specific area. And to pull all of these things together on a consistent basis, we think that at this point of time, it would be best to assume something like 6.5% to 7%.
Okay, 6.5% to 7% we would, take with both hands. But I would still perhaps let us foregather 3 years from now and check whether Michael Patra has made a point which others did not see. Ultimately, I'm a market reporter and this is a market show, so I will have to ask you 3 rapid-fire market questions. Okay, Chetan, where do you see the 10-year and where do you see the rupee? The range, where does Morgan Stanley see 10-year yield and a rupee over the next 12 months?
So, Latha, unfortunately, I'll give you some boring answers to this one, and that is our house view. So we are neutral on the dollar, and so therefore we are not expecting much volatility in the rupee. It should remain in a stable range.
Okay.
And same view for the 10-year.
Okay.
Yeah, the domestic demand is good for long-term paper. There's also this foreign portfolio inflow that is supportive. So we expect it to remain in the stable range.
Okay. Well, Santanu, Vishrut, you'll have to keep it brief. Santanu, rupee range, yield range, next 12 months.
Early 84 in the near term for the rupee, which goes towards 83.5 or so over a 12-month period if the dollar weakens a tad. On the 10-year, we don't really have a forecast, but we have a trade on in the 2-year long bond segment.
Okay. And Vishrut, yields and rupee.
Yeah, so on the rupee, we're around 84, similar to what the others have been mentioning. We expect a gradual depreciation trend of the rupee, so that's something that we're looking out for. We don't really have a position on the 10-year yet.
All right. Gentlemen, thank you very much for joining me in this Diwali special. And all of you have a grand Diwali, you and those close to you. The message, 6.5% to 7% in the medium term is a very good number, but I would still give Dr. Michael Patra's 8% a good chance to be the medium-term growth for India. That's it on this special Indianomics. Thanks for watching.